Hey everybody, it's Pete. Good morning. Welcome back. It is Monday morning, November 16th, 2020. I just want to touch on the current state of trading, not the economy, not political environment, the current state of trading. I think it's very important right now that you realize you're either going to be on top of your game or your game is going to be on top of you. There's no other way to put it right now. Some traders, especially members in the boot camp who are doing the game planning, who are ready for the day, understand a fundamental truth. Every day is not an awesome day to trade. Every week is not an awesome week to trade. And it's our job to work together, whether you stay here with the social media videos or if you make the investment in yourself and get into the boot camp. It's our job to recognize the difference between a great trading environment where everything like August was going higher and you couldn't do anything wrong, and the difference between that and September and October, and even a little bit of what we've had into November, is that when it becomes different, when the tape changes, that's the phraseology you need to have with yourself. Is the tape still obvious? If it's not obvious, how do you know when it changes? When it changes, you have to change how you trade. It's really pretty simple. It's obvious or it's not. The problem for a lot of traders, and maybe you, I don't know, is you don't recognize when the tape changes and you continue to step on the gas and you're getting your head beat in. I can't stress this enough. Your number one job as a trader, whether it's a day trader and a swing trader, I'm going to talk about different ideas today for day trading and swing trading. I'm going to make a very clear distinction between the two. You need to know when the tape is obvious. You need to know when order flow is obvious so that you know what a perfect trade looks like. And everything away from a perfect trade means that you have to manage the trade differently. And generally speaking, it means two things. You either don't take the trade at all because it doesn't make sense from a order flow perspective, a momentum perspective, or a risk reward perspective, which, by the way, that is another big part of trading that I'm seeing a lot of new members to the boot camp just having this epiphany, this big revelation that, oh, I was only chasing stocks that were going up. I wasn't factoring in how much I could make versus how much I need to risk. I wasn't factoring in the fact that it's in the middle of nowhere and there's nothing to do. I just read something online or I saw a scanner pop up. That's not trading. That's chart reading, and that's probably why you're struggling. Tape readers put all the pieces together and finally make a decision. Should I be in a trade at all? So let's hop right over to the charts. We're going to make a very clear distinction about momentum trades, order flows, day trades, and swing trades. There's a lot to unpack today. And if you have anything that you take away from this video before you head into the day and before you head into the week, it's very clear. Are you trading stocks in play right now? Are you trading stocks in play that have profit potential, or are you just chasing price or headlines? And if you're in that second category where you don't understand how to read the tape, you don't understand profit potential in exchange for how much you need to risk, my God, click down and learn about the boot camp. Even if you don't sign up, learn about what you're missing. You learn why it seems some traders always make money. It just seems that way, right? Some traders, it seems like everybody else is always making money and you're the one who's struggling. That means that there's a gap. That means there's something missing. Find out what you're missing. At the very least, stop the losing and then learn to get to the other side and understand how you should expect to make money when there's money out on the table. So we're going to start out with the futures. The futures, S&P futures, as of now, a few hours before the market opens, up a very healthy 30 points, which is pretty significant considering last Monday's massive gap up after the COVID news of a potential vaccine, after the apparent choice of a electoral college vote, which is not certified, whatever you want to look at it, positive presidential election news. We actually said last Monday, we're expecting profit taking. We're not expecting follow through. And that's pretty much exactly what we got. But then inside of our call for the week, we had some very specific ideas of stocks that were hot. We were finding ideas that were getting hit because of that positive news. We call them the stay-at-home stocks. We're going to take a look at them today too. We had the solar stocks, which were incredibly bullish. The tape changed on them, but they're still offering good day trades. So we got a lot to unpack today. Let's take a look at the stocks. We probably have around a dozen or so that we're going to take a look at today. So hope you had a great weekend. Hope you're being safe. Let's get through this very important period of time. Be smart right now. Let's get into some ideas. So heading right over to the market, we're going to start out with space, actually. Ironically, Excuse me, I'm having a failure to type here. Big news this weekend, manned spaceflight. That is a revenue generating idea. You could actually see it's up 4.5%. Look, the bottom line is we've been trading this every time this stock is in the news that we interpret as tradable news. You get a really nice 3 to 5 day pop. This one might be a little bit longer. We might end up turning this into a position trade, but you can see here it clearly needs to get past 26 with some sort of double normal volume. It gets up to that level where somebody, smart money, says, okay, 26 has been the right price. I'm not willing to pay more than 26 with any kind of commitment after that. Every time it's gotten up past that level, it's come back, and you can see now that's the level we're watching for. 20 was the breakout level. Back in July, we had an amazing trade where it spiked on double normal volume, couldn't hold it. We got new news again today. So at the very least, it's going to be tradable this week where we can work a position between Monday and Friday, looking for it to get through 26. Best case scenario, it finally gets through 26, pauses above 26. The candlesticks on the weekly chart go well bid, which is higher highs, higher lows on significant volume. Then we could start talking about a run up to 40 and maybe even beyond. I had to throw that in there, right? Infinity and beyond. So what about the stocks that were the most amazing trades? Well, those stocks, the EV stocks, had earnings last week. NEO printed money, printed some really good ideas for the better part of 3 weeks. I think SPEV is the one that we probably had the easiest trade in the day after earnings. And hopefully you watched this last week where we said, this is the day to get involved. We got involved. It was up 44% or more at one point during that day. It closed up 33 and change. At one point, it was up over 44%. So what do you do with them now? You still look for them. You still look for a spot to manage risk. You still look for a spot to get involved. The story hasn't changed. The tape hasn't changed. Not yet anyway. It's only 1 day. It's a 1 day pullback. It's profit taking. Best case scenario in all of these stocks, including LI. So we got NEO, LI, and XPEV. We're going to talk about another one in a second. Is the best case scenario is we get a pause. We get if you look at today's swing trading video, you understand what that means. You're waiting for the stock to consolidate so you can manage risk in exchange for profit potential. One more down day and closes on the low would really not be the worst thing in the world. If that happens, if it's below the opening price, if it's below Friday's low, you just let it go, you patiently wait, and then we could look for a new entry tomorrow. If it actually rallies right out of the gate today, takes out the opening range, we can still get involved there as well. But I will be watching and building positions in NEO, LI, XPEV. One that's a little bit less expensive. A lot of people are always asking for, I can't get involved in a $70 stock. Do you have something else? Well, this stock a week and a half ago was $11. We've been talking about it, and now it's up to a resistance level. As long as it's well bid above 18, I'm going to keep an eye on it. So what about something COVID related? So obviously on the positive side of COVID and testing is CODX. We've been actually watching this. If you're a member of the channel or a member of the community, you'll notice we started watching it over here. You can go back and watch the videos. This is when the tape changed. This is when accumulation started coming into the stock. And now 15 is the big level. Finally punched through 15. Looks like it's going to open above 15. So really the bottom line here is a swing trade above Friday's high, which is 17. Stop loss will be below, a close below 15, looking for a run near up to 28.30. Now, the opposite side of these are the stay-at-home stocks that you would think would be rallying with the pandemic getting worse, but everybody's interpreting the news of the vaccine in a positive way. So it's discounting future price. So these stocks, I'm not swing trading them on the short side, but I am actively looking to be a short seller in these stocks. If the intraday price action does not follow through to the downside, I'm still day trading them. But right now, it seems like the market is discounting the vaccine into the future, which is projecting out the earnings for these stocks in the future and the world getting back to normal next spring. So it's being interpreted on the tape as bearish. So they should be in your list every day. If you're an active day trader and you understand how to read the tape, and especially intraday understand how to read the tape, you could trade either side of the market. Best case scenario, you'd like something like this where it's at least well offered. So we're looking at Wayfair, we're looking at Zoom, we're looking at OSTK, Overstock. So we're going to have a pretty decent list this week. DocuSign is another one. And finally, Dick's Sporting Goods, which you would think Dick's Sporting Goods would be one that's going up in the, because that's getting out of the house, but that's also well offered as well. So my point is this: these are more stocks to be day trading right now because the catalyst, the story, the order flow, the tape, however you want to look at it right now, is being interpreted as bearish, but more importantly, it's good volatility based on the headline. So you have a catalyst of stocks in play, a whole group of non-related stocks in play, and they're active. If you understand tape reading, you should have these stocks in your list and actively be trading them for cash flow right now, if and when the order flow gets a little more clear, a little more time than just a week, and it becomes obvious that the smart money is either accumulating these stocks or distributing these stocks, then you can hold for a little bit longer term swing trade. And the poster child for those right now, where the tape has changed, is the solar stocks. So JKS, you could clearly see it's not as obvious as it was through September and October. Still actively trading them, still good large green candlesticks. So look at the price action here. Large red, large green, large red, large red, large green, large red. They're active. If you understand tape reading, it doesn't have bigger picture ramifications right now. It's, are there momentum moves with volume intraday in sync with the current price action? You can get involved in these in a little shorter time frame. We have 2 days of consolidating here now in JKS that generally leads to a large red or a large green candlestick. The way the stocks have been trading, you're a little hesitant to call it bullish, but I'd rather be bullish the stock right now coming out of 2 days of pausing. Again, I'm going to keep bringing us back to that word pause. So if there's JKS, there's run, and there's ENPH. I think in the community, JKS has been the most popular stock to be trading because it's been a little bit easier. On the bullish side, again, these certain financial stocks gapped up, held the gap last week, which is very, very constructive. So I'm going to be watching JP Morgan, Goldman Sachs, and Discover Financial this week as well. Pretty interesting setups there. And last but not least, 2 more stocks. Boeing over 190 is pretty interesting. And you can see Boeing, we've been watching this the entire year. It just keeps consolidating and then rallying, consolidating. But now it's basically 4 months of nothing. And this is pretty interesting. Can it finally get above 190 and stay there and make a run at 220 again? I'm going to be looking for it above yesterday's high and looking for follow through. Caterpillar is another one that has actually stayed up there as well. And DE. So these stocks have produced some really solid bullish price action. Going to be looking for some follow through here as well. And FTCH will be the last one that we finished with. Had some really good price action last week. Had a bullish gap, stayed there, went well bid a few days. But we actually said that we didn't like that it was closing off of the highs. So you'd be working in order. So if you're working in order in that direction and Friday pulled back, you're not really don't have that much of a downside. You're looking for follow through again today. So I'll be looking at this one as well. So the bottom line heading into this week of November 16th, 2020, is you really need to be on top of your game. And if you're not sure, I'm going to give you this advice. And I use the words advice very loosely here in context, because I'm not a registered investment advisor. I'm just like you, trying to figure out the stock market, right? If you're not sure, stay in cash. I just can't emphasize this enough. And if you do play some trades and you find my timing is off or I'm losing money, lower your share size. If you feel this urge that you need to be involved and you're not making money and you're confused or you not understand what's going on, best case scenario, you should be in cash until you figure it out. Second best scenario is you must lower your share size until you get back in the groove, get a couple of wins under your belt, you get your groove back again, and you're starting to read the tape a little better. Sometimes it's just a confusing tape, and for the way you look at the market, or maybe you're not following your plan to the letter, it's causing you to lose some cash. So if that's you right now, be smart. Be smart to your future self, so you don't look back 2 months from now and be like, what was I doing? Why did I keep trading heavier? Why didn't I listen? And not me, not listen to Pete, listen to yourself, listen to your P&L. It will tell you everything you need. Your profit and loss statement will tell you whether you're trading good or not. And if you're getting hit, scale back a little bit. There's nothing wrong with that. That happens to everybody. It happens to all professional athletes. If you're in the market, you're trying to be a professional, get your groove back. Start bunting. Try and get a walk. Get on base. Do anything. Get your groove back. And that's the smart way to trade. So if you like these videos and you find them helpful, definitely click down and subscribe. If you want to learn about more trading with me in real time, whether it's swing trading or day trading, learn about the boot camp, I'd love to see you on the other side. And there's another part of that too that I want to bring up. If you're trading well, that's when you got to push it. Those are opportunities where if you got a good read on the market and the stocks that you're looking at, the stocks in your game plan are following through, you got to make more. When more is on the table and you're trading really good, You got to get in there. You can't turn 3,000 into 1,000. You got to turn 1,000 into 3,000. Hang on a little bit longer if you're in a groove, because right around the corner, we might have a tougher environment. You're not going to be going crazy because you made what you were supposed to when it was out there. And if you're not doing that, that means there's a gap in knowledge. You got to find out what you're missing. At least click down and learn about the boot camp and see if it's for you. Have a great day, everyone.